We're going to have more analysis on this right now. Andrew Polk is the resident economist at the Conference Board at the China Center for Economics in Beijing. He joins us now live from there. Andrew, welcome to the show. Look, in Vivi's report, there's obviously a lot of questions here we have to get to. Let's start with the economy specifically. What's happening there on the ground there? Do we or do we not have a slowdown?
Oh, we definitely have a slowdown, and we think that it's going to continue into it's continued into Q2, and by our estimation, will continue into Q3 and Q4. That's from the cyclical side. We see an ongoing structural slowdown into the medium term. So we think China's kind of turned the corner, and as far as its growth rate, and we're on an ongoing deceleration path over the next several years.
So how confused am I? You say we have a slowdown, but Vivi just reported at these record high hot property prices, despite the fact the government's trying to cool down the property market altogether. So the government's saying, stop buying properties, we're going to make it difficult for you, but yet the prices still goes higher. What's going on here?
Yeah, it's a good question. As she mentioned in her report that liquidity was especially loose kind of starting throughout the middle of the year last year, especially high in Q4 2012, and lending grew even more in Q1 of this year. So despite the fact that they've been trying to tamp down prices, they've sort of had one foot on the pedal, one on the accelerator, one on the brake. The accelerator has been the monetary stimulus sort of that's been going on, or loose monetary conditions, and the brake's been the caps on prices. And with that much money going into the economy, it's going to find its way into the real estate market at some point.
There's a bit of a laugh here, because on one hand, I'm giving you all this money and say, hey, here's all this free money, but at the same time I'm saying, wait, but don't use it to buy a car or a house. We don't want you to do that. I mean, the government can't have it both ways.
Right, and we're starting to see them come around. Liquidity's starting to be tightened from an administrative standpoint. Lower loan quotas. They're starting to get some of this off-balance sheet and non-bank lending back into the banks, and that's kind of started in earnest really around March. So there's usually a bit of a 4 or 5 month lag between the turn in the credit cycle and the turn in the housing cycle. So we'll probably see prices continue to rise over the next couple of months.
Vivi mentioned another important point regarding enforcement. Obviously, enforcement is important. I mean, there's regulations on the number of houses you can have, the number of mortgages you can have, and so on and so forth. If the banks aren't regulating this, what's the solution?
Well, if you're talking about the housing prices, you're definitely right. That's one of the constant bugbears in Chinese economic policy. The center makes policy, and it's up to the localities to enforce it. We think that the center is getting more serious about accepting a slowdown and is trying to send the message out to the provinces. So we think that may start to work itself out over the next year and a half or so. But from a monetary standpoint, the central government still does have quite a bit of control there.
Now, I do want to be fair to our international viewers, because we always focus on Beijing and Shanghai and sort of the big cities, but people sometimes forget that China is a very, very big place, and the West Coast is different than the East Coast, and so on and so forth. Do you see the government working and struggling in some ways to kind of have one rule for all? When I mean all, I mean all the different areas of China. I mean, that must be a very, very difficult task.
Of course. I mean, China's the same size as the U.S., has sort of less developed institutions, and obviously a much larger population. So it's definitely a struggle for them. But they are shifting more resources towards the West. Their development model so far is sort of a classic development model. A certain portion of the economy starts to take off, resources and investment go there, and then the rest of the economy catches up. So this is kind of a natural process that they're going through. They just have to do it on a much larger scale than anything seen in history.
It's exciting to watch. Andrew Polk from the Conference Board in China, thank you very much.